Hello, World Wide Web. Welcome back to my stock channel. I am James. I do no nonsense stock reviews live in person, non premeditated. We do them real quick. We look at these companies, we observe what we can, we learn what we can real fast. This is PNC, Financial Services Group, ticker symbol PNC, $137 a share. We're trying to make a quick series of videos of the big banks so we can compare their balance sheets, who looks like what, who looks like it's going in what direction, what the balance sheets themselves tell us. We're catching some trends, hopefully, year over year, revenue, assets, liabilities, income statement. PNC over 5 years has been not a very happy story. Over 1 year, down 25%. Yikes. Looks like a lot of that was experienced just this week. Wow, now that's scary. This looks like a relationship with Silicon Valley. Let's hope not. 1 month, boom, collapse. 5-day. This is what the PNC people were seeing and feeling, and the victims of it. 1 day, down 0.5% on PNC Newsday. I guess the PNC Newsdays was Thursday, so that would have been down to 133 a share at a certain point twice. So this thing hit 133. We don't care about the stock numbers so much. We'll worry about what it's worth later. Number one, let's take a look at their income statement and the obvious. COVID was a bad year for every bank. They all have that in common. Whatever revenue they bring in every month, these are loans that they made, and these are people making the monthly payments on their loans. They're very consistent numbers. When you get a drop like this, that means something bad happened. In this case, the government told everybody not to pay their loans in a lot of cases, so they didn't. But then they came back and they paid their loans. In fact, they took out more loans, and they collected even more money in 2021. And look, we have an uptick, possibly 20 billion from 19 billion, an uptick, and earnings, net income, almost 5.67 billion to over 6 billion. So this is the first one with an uptick in earnings over 21 to 22. This is the first one that did not have a decline in revenue. This means their customers are making their house payments, they're making their car payments, or they're not making those payments and revenue is going up. But then you would see the net income loss falling also. So I would say this one is extraordinarily safe on the balance sheet, especially compared to Citigroup, Wells Fargo, and the other ones that I reviewed so far. Let's take a look at their balance sheet. We're going to see how that looks. When they made these investments, they're a growing company. These are one end of the loan and the other end, the note and the loan. Banks jive together. They're always usually right side up by a little bit, and they stay in harmony. We have not seen an asset drop here. I don't know if that would be the first notable sign. Silicon Valley Bank did not have an asset drop 21 to 22. They kept their loans on the books just as prescribed. Do these houses depreciate? Probably not. It looks like they did a lot of their growing up 2019, 2018, 2020. That's when they were loaning their money, right at the peak of the housing crisis. Now they have a commercial real estate crisis, car loan crisis, and it looks like people are going to continue to pay for their houses this time. If you got a sweet 3.5% mortgage, you're not giving that thing up for the world. You're not on a variable rate. You're not staring at 8% in the mirror. You got that thing so cheap you couldn't get a one-bedroom apartment for the money that you're paying for your $400,000 house. So because they got that cheap money, I see them staying. as long as they possibly can. They might forego food to stay. The list of keeping your house is on the important end of things who have the 3.5% mortgage. Obviously, that's a no-brainer. Cash and short-term equivalents, $10 billion. This is the company with the least amount of money out of all of the companies. Citigroup had $1 trillion. Wells Fargo had almost $1 trillion. Yeah, this one is ultimately cashless, and the size of their loans, 57 billion. They don't do many loans. This is the small bank, I guess. Not that big. PNC, not nearly the size of Wells Fargo and Citigroup. There may be 5% of them. Good Lord. And they have, 1% of the cash. I don't know if a company bank should have this little cash, 5 times, 6 times more money loaned than that. That seems a little against Dodd-Frank, but let's see, shares outstanding, 400 million. Yeah, so first observation is this line is meaningless. In PNC's case, it was just like this. It doesn't tell you anything. I think what tells you something is the lack of revenue. It comes in this year over this year. Wells Fargo fell 10% in revenue. That means 10% of the people that were writing the mortgage and car loans didn't. Their earnings also struggled because of they didn't, and they also struggled because they had to pay a $3.5 billion fine for lying to customers. But that's Wells Fargo's problem, and that's now in the rearview mirror. But they did lose revenue and they did lose earnings because the people didn't send their money. That's the sign that you're looking for. Wells Fargo is my number one villain after looking at all these so far. Citigroup might be right behind them. One thing for comparative purposes, we have a PE of 9, better than Wells Fargo, cheaper than Wells Fargo, cheaper than Citibank. Stock's cheaper. They did grow up rather boldly. Some growth right there. 19 billion. Well, we can't look at 2020. We'll look at this year. 16 to 20. So yeah, that's a little bit of growth. I would say better than 9 PE. Maybe this one could be a 12 PE. Why is the stock so darn high? I'm guessing outstanding shares is low. Where is it? Here it comes. 400 million. Yeah, I guess that is low compared to those other banks that were in the billions. So yeah, the stock price looks actually reasonable for their profit. It's 9 times their profit. They don't seem to be getting hammered on their revenue. It's staying stable. Their profits remain stable. Do they have exposure to PNC? Let's see if they feel like telling us. About half these banks are telling us and half are not. And it's a good dividend stock. We got a 4.3% dividend on this one, which might get better if everything goes the right way. There were shares were purchased by Norberger Berman Group. That's nice. Bank ends business relationship with Trump Jr. I guess that was newsworthy. Donald Trump Jr.'s news coming in dumped by, well, they're just happy to say anything Trump is dumped. PNC Bank reopens Trump. Here we go again. Trump-obsessed news on PNC Bank. They shed 6.1% this week as yearly returns fall more in line with earnings growth. So their stock went down to fall in line with the earnings growth, and that was 4 days ago. This one might be worthy of looking at. Why? What happened to the earnings growth? Did they just get their latest earnings report out? Shareholders are concerned after seeing the share price drop 11% in the last month. In contrast, stocks are up over the last 3 years. However, it's unlikely many shareholders are elated with the share price gain of 43% over that time, given its rising market. Going into speed reading mode, because I know you don't want to hear every word of this, but they were able to grow its earning percent 14% year over year over 3 years. That sounds like good news. Where's the bad news in this article? I don't see anybody. This was clickbait. I'm sorry, everyone. Wow. Okay. So, when do they announce earnings? Let's find out. All right, everybody. We're not going to get their next earnings until April 14th. They're going to make us sit and wait on this one for a while. I like this company for what I've seen so far. I would guess I don't like the fact that they're not declaring immunity from Silicon Valley or declaring that they're not in a similar position to them. I'm a big fan for that. If you're a bank and you want depositors to put money in your bank, you had better tell them you don't have those issues. Your lack of telling them is a bad business decision. Your lack of telling the investor is a bad investor decision. You need to be telling people over and over again. You go to Wells Fargo's news feed, it's one story after another of the company claiming they have nothing to do with it. Now they could be lying. Maybe that's the guilty conscience talking. But it would just seem prudent to say something. It's an American bank. They're in Pittsburgh, Pennsylvania. They operate in 21 states, including D.C., 2,600 branches. They're on the list of America's largest banks. PNC Financial Group, I like them more than the others. The price is high because of a low outstanding share count. Don't let that make you think the price is high. The market cap is a paltry $54 billion. They're priced as a small guy. Their number of loans is a third of Wells Fargo and 10% of Citigroup. But it's all in proportion to their outstanding shares times the earnings. That's what the price is. The PE on this one is, did we already go over that? 9.9010. I can see this one going up a little bit after the shit clears until they come out and start telling people that they're safe. Once you hear that they're safe, you might be able to see this one come up again a little bit. It looks like it's been jockeying on the bad bank news all week long. We were at 154 just 5 days ago. So to say this banking crisis and the looming news and the looming expectations of Silicon and other banks going under, it's already had an effect on them to the point of 10, almost, $18, $17. So yeah, they've already been affected by the bank fears. Are they immune to it? Well, they better tell people real quick. Do your homework on that before you touch this one. I am declaring this one my favorite. Why? Because their revenue didn't go down. Their customers are making their payments. And this says the customers are making their payments also. Net income raised, which is the first time we've seen that in any of these banks. Their balance sheet, stable, not gyrating out of control in any way, shape, or form. I wish they had more cash. Hopefully they'll be getting it. They are profitable to the tune of $6 billion a year. Maybe that cash is the last couple of years' income. I don't know. They need more cash. That's the only thing they need, and their ability to get it is probably very simple. Um, PNC Financial Group, my new favorite of the banking sector. They seem to have their act together the strongest. They all seem pretty darn strong, except for Wells Fargo is seriously concerning because of the revenue drop. Citigroup had a revenue drop. PNC looks to be relatively good shape. I'm James. Quick analysis of PNC. You like my video. When you like it, more people see it, and then they click on it, and they subscribe to my channel. It does me a world of good. I really appreciate you doing that. Also, subscribe to my channel. That helps too. I continue with stock updates, new stocks, old stocks, ones that you might not be aware of, ones that you want to be in, ones that you want updates on. I like to make quick videos on the banking sector. They're going as long as they go. This one's entering the 16-minute zone. I need to go. We got to have a life and analyze some banks at the same time. Have a wonderful day. And it's Sunday, everybody. Get ready for Monday. It's going to be a bank fear day. Don't buy this thing early. If you want to take advantage of some chaos later in the day, go for it. I say wait a week or two, but I'm a fan of PNC. Thank you very much for watching my channel. We'll see you next time.